we'll take it from there. Okay, so welcome guys. I know it's been a couple of weeks since I streamed. I've been really busy. It's not just Unity. I've not streamed in any of the other servers I'm an analyst in. I've only been whatever free time I had, I've been giving it to my own place. So but now that I'm back for a bit anyway, should be regular live streams again until whatever comes up next. So let's begin. Wait, yeah, that started. Okay, let's begin from top down, right? What I mean by that is let's begin with the macros first. Let's get the boring stuff out the way, okay, before we look at any coins. Dixie, trash, absolutely broke range lows. Beautiful to see. Okay, risk on regions typically should be up there, but now Dixie collapsing. Global liquidity. Let's see what the Fed's gonna do. There's a lot of talks coming up this month. That's coming up, I believe, this week, this month, May. There'll be a lot of news going on. So let's see how that impacts the markets as a whole. But global liquidity is on the rise, and that's always something that is. I'll explain in a minute. It'll be easier if you see with the example. But let's just keep an eye on this. Basically, Dixie's collapsing from the range. If it doesn't flip this again, I think you probably go down to visit like 95s and maybe even 92s, depending on how long of a time frame you're looking at, right? But yeah, Dixie absolutely going down, and risk on assets not really catching a bid, which is really surprising. But I mean, it's not really that surprising. What's surprising is how little of a reaction we've had, right? But it's not surprising if you consider we're still not in quantitative easing yet, right? We're still, the Fed's the monetary policy is still quantitative tightening, right? The Fed is reducing the balance sheets, they're not increasing it. So until we see that change, until we see that pivot to quantitative easing, we're not really going to get that huge amount of buying pressure going into the markets. The flood barriers are not going to open for the masses, to speak in a proverbial sense, right? So that's that. USDT dominance, what are we doing? Just ranging still, right? You hit the 886, raided, you'd put in inverted smiley face here like we were discussing in last stream. That's why it would have been there, I think. So we put the inverted smiley face in that area we were talking about here, right? There we go. But at the end of the day, until we go and break down from here, right? The trend line we've been holding up all this time, until we go and break down from there, this definitely has the potential to do something like this, right? So let's see. Don't get too horny until something like this happens, right? That's what we really, really want to see. But it's getting closer and closer, right? You're getting more and more compressive. Eventually, there is going to be a move. So just survive until that big move does happen. USDC dominance is still chopping in between the zone. This got the inverted smiley like we were talking about as well. Okay, but again, we don't actually have a breakdown from the neckline yet. Right, we don't have a breakdown yet, so it's not a confirmed, we're gonna go down to 1%, 1.7%. It's not confirmed yet. The neckline is still holding, right? But again, if the market cycle isn't over, which I'm leaning towards, obviously the cycle isn't over, and we still think we get I still think we get one more drive up on Bitcoin to take new highs, and similarly, I think alts get big rotations too. If that is the case, right, and we do go, a few months, even a full-on just parabolic euphoria, then I think this 886 will still be an amazing target for USDC dominance to hit before bouncing, perhaps for the next bear market. Right, we wait for like the 618 or something to tap before the next bull market comes back, something like this. But that's USDC dominance, right? USDT dominance we've already looked at. Why is that 2? I'm not sure, but we've already looked at USDT. Oh no, sorry. This is USDT plus USDC dominance. Same thing. There is a bullish bat I'm eyeing for the bottom, or rather the top of this cycle, right? The bottom of this chart. But do we get it or not? I don't know, right? I don't know. We could, bounce from here, go up, and then next bull market maybe get this. Who knows, right? But it's a target nonetheless. The 886 is always going to be a valid target. So I just have that in case this is where we top out this cycle. There'll be reasons and confluence for why the market top would come in here if we came and we saw the structure in this area. Be bullish, right? So that's that. So next, let's look at BTC dominance. Okay, so I'm going on, which chart is that under? That is going to be here. Okay, so Bitcoin dominance. I've been telling you guys, just be patient. We're going to get these higher levels, right? We've been talking about this for ages. Like if you remember, even back in March, right, we were saying as long as you're holding above 2019 12-month macro read bar zone mid, eventually you're going to get that 1.618, right? You're going to get that deep crab, and if you get above the deep crab, your next target is anywhere between 64 and 64.1 and 64.3, and now you're flipping that. So if you flip this, you're finally gonna get that target we've been looking at all this time. And if you're regular in my stream, you'll be familiar with this chart. It's been there for ages. This 1.618, right? I've been saying this is a 2-week fair value gap to the downside, right there. 2-week fair value gap. You have an ABCD, so I'd want to see what kind of reaction do we get here. If no resistance is offered in this area, we're gonna go to 70% plus. Okay, 70 to 73%, and if you rate that, probably 74 to 75, something like this, right? We can't be surprised if we get that. But before that is going to be this. So I'm going to see what kind of price action do we get here, right? So as long as now can delete this, that was lower time frame. As long as you can hold above this region, right, between your yearly 2020 12-month macro read bar zone mid, and this one here was a slightly lower time frame, like the monthly or the weekly or something, right? As long as we can hold above this, we're going to be going higher still, right? Like you can see that it literally looks like it's bull flagging. So if this is some sort of bull flag, the target for this, for example, even conservatively would be there. If you put it at the point of breakout, you basically line up with a 1.618, right? So we've got reason to believe this is going to hit at some point. So this is what I mean with wave structure. With time on the higher time frame, you have to be patient. You can't be zoomed in on the 15 minutes thinking you're gonna, like, retire yourself and your bloodline, right? It's not gonna happen. Higher time frame. That is Bitcoin dominance. Ethereum dominance, absolutely terrible. Very, very shoddy. This thing is so weak. It needs a defib. It needs stimulation. That's what it needs. This is depressive, right? Ethereum, the second biggest crypto market cap, in its dominance has gone and taken out the lows. That is absolutely terrible, disgusting behavior, right? So at this point, is until we reclaim this, there's nothing to be done, right? In fact, you could even argue for this, right? If you wanted a slightly higher risk but also higher reward entry, it'd be that's holding, right? So as long as this is holding now, your risk management is going to be in relation to that, right? If you're longing ETH, it'd be something like this, right? T1 is here, Terminal 2 is here, 19.79 RR trade, right? If you're looking at Ethereum dominance. But I will not be comfortable until we get above this level. This is what you need on the macro to be able to expand. If you don't get that, then yeah, it's what it is. You're just going to keep chopping in this range for a bit. Ethereum's not going to do much. Shoddy, terrible behavior. This is not on whatsoever. But that's ETH, right? So let's look at total. First, total 1, right? Total 1. Very nice. We held the 2021 12-month mid on the higher time frame, right? So raid back to reclaim, right? But we are not out of the woodworks yet, right? You need to see this, okay? 2021 all-time high, 3.01 trillion. You're still below it. If you go and remember what I said, we could do this, right? What you don't want to see is this now, multi-year distributive structure coming on. If you get that lower high there, your best case scenario is a pullback to 2.6 trillion again. If you lose that this time around, it could go and rate 2.21, something like this. That's all fair game, right? Below this level, that's all fair game. So if you're someone that has missed this move up and now you are thinking, is it a good time to get in? It's not. Just wait for this flip, okay? Because if this flips, Bitcoin's clear to run up more, and if Bitcoin's clear to run up more, your alts will follow. If you enter here and this happens, right, your alts might take a hit. Now, depending on Bitcoin dominance, how it's behaving, there might be some alts that still run if Bitcoin chops or drops, right? But majority of the time, alts will follow Bitcoin, right? So if you didn't pull the trigger here, wait until this to pull the trigger, right? If you waited all this time, you can, in my opinion, you can afford to wait a bit longer, right? You do not pull the trigger at resistance now. Right, so you're gonna wait for that flip or acceptance above, right? Even if you don't get that pullback for a flip, acceptance of closes above, and then you see sellers are attempting to get down, but buyers keep closing above, right? The level. That's what you want to see. Strength coming in above / at this area. You do not want to see weakness going into this, because if that happens, like I said, do not be surprised by another, maybe even one more lower low. Don't be surprised. Okay. So let's wait for that flip. If you're looking to enter fresh positions, just wait for the flip. You can manage your risk very easily above this level. You can't manage your risk here. Your risk management here, to put it into visual context, is just this, okay? Your best scenario is you're gonna close at a loss of this. 12% down on total 1, by the way. Right? You're saying you're going from 2.89 trillion down to 2.53. Right? That's for a tight stop loss. That is a valid stop loss there as well. 2.3 trillion. Look, your risk to reward isn't even worth it to our first targets. For me, I'd want risk to reward 3 minimum. Right? So that's why it just isn't worth it. But if you wait to get above this and you wait for the retest wicks to come in, you'll have a logical area to put your stops below. Right? And that way, even though you're entering higher, you're entering better trades. Right? So just wait. At this point, just wait for that flip. Otherwise, you risk just getting rejected there and just coming back down again. Total 2, trying to reclaim the mid. As long as you're holding above the mid now, that is fine. Right? If you hold above the mid, we can target the highs again. If you lose this mid again, however, basically just pivot around the mid. Right? As long as you're below the mid, you're not going to be looking at total 2. Until your alerts pop off at the next key levels. However, above the mid, you have a chance to run up towards here. i.e. ETH has a chance to catch some really good rotations, right? So you wouldn't write ETH off completely as long as total 2 is above this midline here. You're above the mid of your consolidation zone here. Okay, so if this happens, we can very easily see that. And again, on something like the weekly or even the monthly, technically you've already had that there, right? But this could very easily go up and end up being higher time frame distribution, right? We can't write that off yet because we have an initial resistance, we have a big radon liquidity for now, and if you cannot come and confirm this into support, you are going to reconfirm resistance again, right? And on the higher time frame, that's going to be like quarterly distribution, which could easily take you down to take these lows out before we go higher, right? Now, what would this scenario be? This would be a extended cycle scenario. What do I mean by that? We get our move up, right? Maybe towards the end of quarter 3, start of quarter 4, right? What you want to see, if you want to just get a blow off top and you want everything to go up right now, is you want to see this. If that happens, we probably go and take the highs out ASAP, and then we have a blow off top scenario, i.e. we just absolutely rally up to the highs again, blow off top, and then the cycle's over, in my opinion, right? So let's see. So if you want to build more positions, then you want this to reject and have one more flush, right? If you want cheaper holds, so on and so forth. If you've already positioned yourselves and you're now ready to cash in on the profits, you can't wait, then you want this to grind up and flip this into support, right? That's it. This key level here. This is all in relation to that mid, okay? The mid of this consolidation range here. As long as you're above this, the highs. If you're below this, there's no reason to target the highs until you flip it back into support again. Total 3 above your consolidation range finally, which is good, closed above. So if you can now, the perfect thing here would be to give a retest. If the retest was successful, you could see a run up, right? Maybe you see something like this, one more pullback, and then this, which is what you're looking for again if you're bullish, okay? If you're bearish, you want to see this come up here, confirm rejection on the lower high, put on the lower high over here, and then go nuke the lows, hit the 886, so on and so forth. If you're bearish, that's what you're hoping for. But anyway, the line in the sign is 788.86, okay? As long as you're above that, all is fine, right? And as long as you're above the mid of this as well, again, exactly like we were back over here, you're also above the mid of your mitigated liquidity pocket, right? As long as you're above the mid of your mitigated liquidity pocket, you're saying an area where sellers were in control of the buyers in the past is once again, buyers are attempting to stay in control over the sellers here, right? If they are successful, obviously that is a bullish thesis, that is a bullish pivot, right? And then you'd be looking for higher prices. You'd be looking for that rotation into altcoins to take the lead. And others, now for more of your low caps, right? Still doesn't look the best because at the end of the day, this is still resistance. If you manage to come down here and put some sort of smiley face in, this will now look amazing, right? Something like this will look amazing. Or you're just waiting for a reclaim of 258.82 billion, right? If you can reclaim 258.82 billion, you're clear to go to the mid and above that to basically the range highs, right? That's it. But you did hit the 886 and you held the 886 like we talked about, right? So the 86 was held, and now we're reacting off that. So we can't be surprised if this does lead to a sizable pump back up. But if you're wondering why are my alts pumping, right? BTC dominance grinding up into resistance, so you're getting a little bit more chop. You're getting total 3, right? You're getting total 3 breaking out of its previous consolidation range again and trying to flip it into support. You're getting others trying to reclaim its old range lows, right? So if they are successful in doing so, your old rallies will continue. Okay, you're not going to get sizable pullbacks like you think you will. But if these do reject, and what we have coming up is a triennial close, okay, in 2 days 9 hours time. If we close that 4 months, let's say below all this, then we might have going into like, you know, next 4 months, next 3 months, next 2 months, an initial week or two after the 4 month closes of down before we go up. That's something that could happen too, so keep an eye out for that. DeFi, total DeFi, below the trend line still, right, rejecting off your buyer zone from history, right? So you want to get above that, you want to get above the trend line, of course, but what you are doing is you are now above the 886, right? As long as you're above the 886, at least you're above a bullish structure. So what could happen is this could lead you to go up and then reclaim eventually, right? You have a reason for why you'd be looking for bullish pivots here, because you've completed an 886. The only thing that's going against you right now is the fact that you're below the trend, right? But you're approaching breakout. If you do this supply zone like this, right, if you can go and flip that into support, then you don't have much stopping you from going higher. Okay, that's the thing. So just keep that in mind. Total DeFi on the precipice of either one more flush, because if you cannot flip here, it's going to go down, or on the precipice of a breakout and the eventual reclaim. That reclaim is where this is going to absolutely send. Okay. Now, total DeFi dominance. Is there anything interesting on this one? Let's take a look. I didn't realize total DeFi had a dominance chart. I only found out the other day. But even in terms of just simple price action, what you're doing is monthly seller zone. You're below it. I'd want this to be above 2.68%, okay, for DeFi projects. As long as you're below that, of course, you're at resistance, so that's something to be wary of. That is 6 months. Is that the yearly too? That is not the yearly. And in terms of the yearly, you have this. There we go. So basically 2.68%, you need to be above that. Okay, we want to be above that. So you're not going to be putting an entire port into DeFi coins, right, when this is looking like this. This does not mean that DeFi is going to do shit, by the way. This is simply showing you how big is DeFi right now compared to the rest of the market. And we're saying DeFi is only owning 2.61% of the pie, right? So, of course, that you can also take this as that means there's a lot of room for growth, right? Because if DeFi really takes off, this number has a lot of room to go up 3%, 4%, 5%, so on and so forth. But yeah, this is showing you how much of the piece of the pie is owned to total DeFi. Okay, so. However, for that to go up, of course, you need to be above this resistance. If that happens, then you have a chance for this to go back towards 4 and 5%. So that is why total DeFi will look much better if the 4 month were to close above 2.68% in 2 days and 9 hours time. Okay. And last but not least, others dominance. Now, others dominance, what's been doing? Okay, so one pivot I've always gave you guys is if you lose this zone, cut your odds, right? So if you'd waited until you saw this basically turn to resistance and a close below here like this, right? And you'd cut your odds, you would have saved yourself that little flush that we had at the start of April, right? That nuked everything like 10-15%. You would have set your that's in terms of like alts, right? I'd say the average drop was around like 10 something percent. You would have saved yourself the heartache of that. Many things drop way past 10%. I'm looking mainly at high caps, which is why I'm saying that. But what we have done here now is this butterfly that hadn't completed before, that has now completed, right? So this is literally your saving grace, okay? This butterfly is the reason you are being propped up right over here. Look, 786, 1.272 basically, right there, right? That is your butterfly harmonic, bullish butterfly. So if this butterfly can lead you to reclaim this low, then I'd say you are back on for your original thesis, which is as long as we're above this, you'd be in alts, you'd position for higher prices. Okay, but if you cannot get above this and you keep doing this, eventually I would expect a drop down towards 6.5% basically. Okay, so that's something to watch for on total DeFi. So please be careful. Are you landing the sand right now? 7.71, something like that percent. Basically, just draw the butterfly on your screen and see where the 1.272 is. That is the thing you do not want to close and turn into resistance below, right? Right now we can see this very clear SR flip of this area, right? What was on support for the longest time is still resistance. So we can't be surprised if we do chop some more, right? But above this zone, original thesis is back on. Below this, you have one saving grace, which is this, right? And below that, we get that level we're talking about, 6.5%. You do not want to be an alt if you start turning this to resistance. You can think along those lines, okay? So And this is another reason why I'm saying if you're now looking for fresh entries on altcoins, what's the point? Again, there was a chance here at the 1.272, right? Now you propped up against resistance. This really big area, we know that's the PRZ of the bat, so on and so forth, the area we had to hold in history. You're up against that, you're treating it as resistance right now. So if you do close this on the 4 months below, right, as a breach of that key zone, and the weekly is also SFPing, and this, the previous weekly close, obviously that happened yesterday, closed below, then there's nothing stopping you from doing that, right? We can't be surprised if that happens. However, if you wait for that, then as long as this is support, you'll have a reason to once again be in altcoins. So if you miss this entry again, please don't be going all in at resistance, right? And this is what we say time and time again in our streams, which is why when you add such macro levels of importance, right? Because it's not like we just went there and popped off. The fact of the matter is, altcoins, the actual entry on altcoins were present for a while. We went over them every stream, every video I released. We went over this looks good, this looks good. 20, 40, 40, right? You don't want to be completely sidelined. You don't have to be all in, but enter with a initial position based on how big your invalidation is, and then save a portion for DCAing or sizing up, add a flip of resistance into support, and save a specific allocation for when the trend shifts. I've been saying this for the longest time, right? So that's why at areas like this you bid, because then many alts like we've seen Sui, AVAX, Aptos, Say, Cetus, all of the coins we're looking at, they popped, right? Say's done more than not Say, sorry. Cetus has done more than a 2x in less than a week, right? But now that it's done a 2x, are you going to jump in now? And the answer should be no. Unless you already have a position and you're waiting for that final allocation of the trend shift, you're not going to be looking for fresh positions, right? And that's the thing, is those entries we were talking about were sat there for ages, and it took less than a week to 2x, right? So that's the brutal thing about the markets. Like, you get complacent, you think, oh yeah, I've got time. And at the start, yes, you always have more time than you think, but that does not mean that you all of a sudden decide I'm only going to pull the trigger 6 months down the line, right? Because then you miss on the moves like this. So now you're at resistance, unless you flip this into support, you're not going to go higher. So you're looking for that pullback here, basically. Either looking for the flip or you're looking for the pullback to add anything else that you want to add. Total 3 against Bitcoin, lost that structure. So while it's below this, again, under the thing here, total 3 looks very weak against Bitcoin right now, right? That bullish harmonic is giving you a type 2 return right now. That'd be my argument. And right now, the PRZ is being treated as resistance. So again, as long as that is happening, that's not a good sign. However, what you are also doing is flipping resistance into support, right? So here's your supply line, originally the red line. There's your breakout retest, right? That's flipped to support. And right over here, you can see that what was once resistance has flipped to support. So as long as you're above this now, you're waiting for this, and then total 3 will look good against Bitcoin again. But just right now as a trader below this level, I can't say it looks good. I have to wait for this to say yes, the pivot has happened that we want. It just looks ready to go higher again, right? But that is all the macro indicator charts. So let me check back to the chat. Okay. Yeah, sure, Shaker, bro. See you soon, man. That's a scalp right there. Nice scalp, bro. BTC.
Hey, what's up, bro? I'm not driving anymore.
Yeah, sorry,
Yeah,
brother.
it's just a hedge scalp.
Yeah,
I've already trimmed 40%, trimmed 20% at 94, and then another 20 at 93
yeah,
last night. This range has been pretty choppy, to be honest, since Wednesday. Cash has just been ranging between 5% and like 5.17, I think.
yeah,
More like 5% to 5.1, and then we picked up. So yeah, I took a long on Fartcoin last night at 1.07. That unfortunately got stopped at break even
yeah,
after going up 5%, but around 15% today. And then I'm in this Bitcoin short. I think right now we're at a very indecisive level in terms of where we're actually heading on a high time frame, in my
yeah.
opinion, Webman.
Definitely, brother.
I
Yeah,
think you hold the same stance, right?
yeah,
Because right now we're just going to chop this range, and for me, I don't want to get caught in that chop. I just want a clear direction of where we're heading. So I don't mind scalp trading the range. It's cool. It's quite easy and very volatile, especially with this week of news.
yeah,
But I do want to see if we can get higher time frame closes at the start of this week above 96K.
yeah,
We don't do this. For me, that indicates we're going to have a break of structure to the downside. I know a lot of people were looking for 87K
Yeah,
to hunt stop losses for people that shorted early at the previous monthly high. For me, like if you're going to get higher time frame closes above 96, 97, it wouldn't make sense for us not to go to 100 again
yeah,
because it's so close.
yeah,
Like, oh,
exactly.
it's just what it's just going to front run it. Everyone sells at 99 to 100, yeah, but I do think that liquidity grab would be inevitable.
Yeah,
So yeah, very indecisive at the moment with where cash is. And where Bitcoin is right now. Also with the stock market, I mean, investor sentiment is improving, but if you look at gamma data, delta volume, it's not fully back yet, especially when it comes to options and things of this nature. And then we've had obviously what's happened in Europe today and all the tariff stuff. So yeah, there's a lot going on right now, bro. Honestly, it's
yeah,
I'm
yeah,
curious
bro.
to see where this plays out for the rest of this month
Yeah,
and for May as well.
yeah. I want to see how this 4 month closes too. I'd want it to close above 93 minimum, but 2 days, 8 hours left. Let's see what happens. Okay, so let's look at Bitcoin first in terms of proper crypto now, and then we can move on. If you guys have any alts, put it in chat. But we'll look at Bitcoin, ETH, some of the other ones we've been just an update on coins like say AVAX, Aptos, High, Pondo, Cetus, our main coins basically, right? And then if you guys have any requests, I'll
I
take a look.
tried a short on Cetus earlier, bro.
Yeah,
Yeah, it was a scout short. It was when Bitcoin was it was just 5 minutes before New York Open. Bitcoin was dumping. Obviously, Cetus is a SUI beta or whatever.
yeah,
It follows SUI's price action. It was a very tight stop. If
yeah,
I pull it up now, but it was a 1% stop loss, and I was targeting 3 to 4 hour.
yeah.
Um, but it literally just hunt my stop loss and then dumped down like 6%.
Yeah, bro.
I was
Cetus is
like,
a
oh,
nasty one. It's a nasty one.
yeah, it's my first time trading it really. I
Yeah,
was like, yeah, this coin is so choppy. I'm gonna stick to trading Solana.
yeah,
Like,
yeah. Um, okay, Farcoin, Ondo, Link, AVAX, sweet. I'll take a couple of them
these are
myself.
all very good suggestions. I'm glad that everyone in this group trades sound projects, you know?
Yeah, yeah.
Yeah. No one's asking for whiff analysis. I wonder why.
XMR. Okay, we'll look at that. Okay, well let's look at Bitcoin first. I'll give you guys my thoughts, and then we can take a move on. So for me, I'm gonna base it off time frames. The first thing that's happening that's significant for me in terms of time frames is the 4 month close, the triennial close. It's gonna happen in 2 days, 8 hours. Okay, very indecisive as you can see. All this is telling you is the highs got rated and the lows got rated too, right? Um, this is pretty much that Darth Maul candle that everyone talks about, right? You've got the long legs and long neck, and then just the tiniest dimpy little body. For me, if you're talking just key levels, technicals, right? My line in the sand is, and again, this is going to be slightly different depending on what exchange you're looking at. I'm looking at the index chart, like all you need to do is basically look at this area here. At 2024, this was the area where sellers were in complete control. That's what I've marked down. And for now, what's happening is, right, so that was the area that kept support, support, support. And on the lower time frame, of course, now you have the weekly buy seller zone over here as well, which is what I've marked down, right? So there's your higher time frame level and then your lower time frame chop around the higher time frame level, basically. So as long as the 4 month closes above this area, and going into next week or even the next, the next 4 months, so that's going to be May, June, July, August, we do not close below this, and this is for now specifically for the late cycle scenario. I think we'll be in very good stead to put in a really nice pump going into the last the last like triennial section of the year. Okay, specifically into the last the last month of the third quarter and then the fourth quarter. Okay, so on a simple basis, if you look in lower time frame, right, I would recommend until you go and turn 93,466.28 back into resistance. And again, do this specific to whatever exchange you're trading at, right? Because arbitrage is the thing. But just looking at this, until you get below this, I'm just going to be looking for scalp longs to the upside. Okay, you go into to turn this into resistance, very easy. You can be looking for scalp shorts down to these levels, right? But on a higher time frame basis, hopefully you can see, as long as we can maintain now closes above this region, and at a minimum I'd want closes above zero point 0.5, right? I do not want closes below 89,416, of course, right? Wicks there are fine. Maybe one or two closes on something like the daily, the 3 day, maybe 1 week close. But if it's a weekly close, I want that to be bullishly engulfed, right? If we can maintain this area support now, we do stand to put in a cumulative structure at this area, okay? But that is only if we do not violate these, especially below 91,424 in terms of candle body closes on the higher time frame, okay? Because we know this is in terms of deviations around the yearly level, this has happened before, right? So there's your 2024 close. There's all the deviations that have happened on the weekly or the daily in this case, but even on the weekly, all the deviations that have happened before, right? So as long as we do not violate this in terms of deviations, we'll be fine, right? But if you start closing candles, as you can see, below 91,424, that'd be my line in the sand to keep risks really, really tight, right? If you're looking for fresh entries, I'm not going to be entering anything here, okay? But if you are, I would not want, you guys do not want to see closes below 91,424. Okay, you don't want to see closes below 91,424. Wicks are fine, closes are not. Okay. Another way to look at this now, of course, is if you look at this in terms of this. Okay, key inflection areas. This is the other example I was giving you guys here. Okay, so if you look at this, what we're saying is, in terms of historical ranges, right, we are still within the fresh range that we've put in, right, this year, or since 2024, realistically speaking, but it's not been that long, right? Because what we have here, basically what marked out is, here's your all-time high from 2021, here's your actual all-time high from 2021, and here's your 2024 start of the year peak, right? This represents an area, as you can imagine, that is very, very significant, right? Within this zone lies the 3 all-time highs that Bitcoin has given us back to back to back. We haven't even retested that zone yet. Okay, and some people, if you are extremely short biased, right, if you are someone that thinks we definitely need to get 69k, and again, I completely go against this type of mentality of saying we definitely need to do this, right? You've got to be flexible as a trader, okay? But if you're someone, because I know a few people are definitely waiting for, you know, quote unquote, definitely waiting for these levels to get hit, then you're going to be looking at this like a front run, waiting to trap longs to then run stops in the future, right? But if you look at this now from a holistic approach, without a bias in your mind, without an up or a down bias, the obvious thing to look at this would be to say, okay, well, this is the area where everyone wanted. So obviously what they've done here is, remember the 2 scenarios I said were more likely than the perfect tap into, like, you know, the 72k area is either the front run, which is what we got, or the liquidity radar saying either you're going to front run this and you're going to bounce, or you're going to go deeper than people think and get hit, like, you know, 65, so on and so forth, right? 63 even maybe, but definitely below 68 or below would be what I would eye, right? Because that would already be stopping out loads of people, and the deeper you went, the more people that are piling onto longs here, the more they're going to get stopped out, right? You always got to go for what is, where would majority buy, and if they were to get raided, where would be like a appropriate confluential area to raid, right? So it was either the front run or the range would be somewhere down here, which is what we said a couple months back, right? So if you go off that thesis, all we've had here is a front run, right, of your key area. If you're thinking again in terms of buyers and sellers, what you're saying is, when you got to this area, demand was so high that buyers didn't even let sellers come down to test this region, right? The limit, whether it's the aggressive market buying, whether it's because of the limit buys, the demand was so high that sellers didn't even have the strength, the size, the volume to come and test these levels. And if you think about it in that sense, all of a sudden, you can't help but look at this particular move up as something that could lead to a bullish rally, right? So that's what I always say. Always have theses, never ever be like, oh, this has to happen or this has to happen. So for me right now, it's very simple. As long as we are above the HPR6 mid, okay, that is the mid of this new range that you've created, right? Above all these all-time highs, that is the mid of the range you've created, right? This is what we're looking at. You know, use that support, you turn into resistance, and the thing I was telling you guys before was, as long as this is resistance, expect this level to get hit, and in this case, we got front run, right? But now we've broken back above it. So any pullbacks I have, right, the longs I will be looking for is only if we get a successful, again, reclaim, i.e. you've got the breakout, see if you get some sort of successful retests of this area right over here, right? If this is a successful retest, what we say is we've reclaimed the mid of this range. And if you're thinking of this simply in terms of range trading is super simple. You long the lows. If you see buy stepping in, your first target is the mid, right? And if you show strength at the mid, then your next target is going to be the highs, right? So if the mid is not lost now, as long as the mid is not lost, I'm not going to be thinking about 72k or 69k, right? I'm going to set an alert up for this level, and if we start violating and closing below this area again, then I'll be like looking for, okay, as long as we're below this, I'm going to be looking at these areas again. Very simple, okay? But as long as we are above this area now, my bias is going to be towards, let's take more liquidity, let's keep taking liquidity until, like, you know, the move is done, basically. right? And for me, I've got targets I already put in my channel, but the targets I'm looking forward to see potentially where we could stall out, right, is right over, I believe it's in this section. Is it here? One sec. Yeah, here. So not this one, not these. Where's it gone? One second. Oh, did I delete it? I might have deleted it by accident. Okay, it's alright, I can draw it back on. Oh no, it's here. There we go. Right, so let me just get rid of the let me just zoom out a bit so you guys aren't blinded by the lines here. Let me zoom in rather. There we go. So this is what I put in my chart. I'm only going to be entering longs now, right? If we go take this level as support, right? I want to see successful closes above, and I want to see, aggressive selling going on and the sellers being absorbed. There's specific triggers I'm looking for. If that happens at this area between 89,175 and 88,642, and again, this might be slightly different, right? The numbers might be slightly different depending on what exchange you're charting on. Okay, since I'm using the index chart, this is just based off the index chart as a whole, a macro outlook, if you will. But if this spicy region, basically, if this holds, I'll be looking for longs back to the upside, right? If you go and flip this area into resistance again, I'll be looking for shorts back to the downside. Or if you don't even get that pullback first, I'll be looking for some more chop until we firstly, number one, right over here. There's your first PRZ. Okay, you have a crab 618, 1.618. You have a shark. You have a shark 1.13. Let me do this so it's not confusing. Actually, let's do this. Hang on. Bearish harmonics. Let's turn everything off and we'll build it out one by one so you guys know where everything is coming from. Here, the first thing, this one right here, right? XABCD. There is your crab. Okay, this is your normal crab 618, 1.618. That is where this is coming from. Okay, 97,411. Next, you have XABCD 1.13 at the lows. We know that is extremely valid fib ratio. In my own system, I treat that like a liquidity raid to the range extreme, right? So if we were to take a look at this as a impulsive range, then what you've done is raid the liquidity of the range. Because what many people do, many people that use fibs, their default is 0, 0.236, 0.382, 0.5, 0.786, and after the 786 is the 1, right? And after the 1 is once again the 1.236, right? They don't have any other levels in between, but 1.13 for me is a liquidity rate level, right? So what's happened here? You've liquidity rated the 1, right? So people who wanted to enter at the 1 again, the double bottom structure would have got stopped out, and then after that liquidity was taken, that is when you went up, right? So we have 1.13 extension of the shark. That is where this level comes from. Right? So I know initially this might look scary and confusing, right? A lot of lines, but all we're doing is finding confluence for particular areas in terms of ratios, right? Next, we have from this high here, X, A, B, C, again 1.13, and then D, right? So this shark, that's the 1.13 extension, right? The other thing this shark can do is also give you this 886, okay? So if I was to click here, the first target for this shark again would be that 886, okay? Right there, basically, that's where that's from. And after you get above the 886, you target the 1.13 next, okay? But this 886 comes from there, and now this 1.13 is again coming from the same wave structure. If you extend this, then you're looking for extension. So if you flip that area between 96,918 and 97,550 into support, then you go higher than people think, right? I think 102,484, you have a wave structure taking you there, right? If you get above that, then, for example, you have this macro XAB, and again, that C is a 1.13 still. The 886 for the D of that's going to take you up towards there, right? This shark can give you a 2.24 extension to 104 as well. So that's why I said this is going to be your first PRZ, right? Your first area of interest. Wait, if you see sellers stepping in here and you see counterbody closes below, you see buyers trying to get above, but you see SFPs, right? You see that aggressive buying is not being rewarded, right? All those aggressive buyers are not able to overcome the limit supplies. Then you have a reason to try to take a short down towards here. And I'd go with a scalp to swing mindset. You're not slapping on a swing trade for no reason. For leverage, specifically for leverage, I would begin with the scalp to swing mindset. You're going to treat the trade like a scalp first. You're going to de-risk out your preferred RR. And then instead of closing out the full trade, you take a portion out perhaps and then put your stop loss to break even to try and run the rest towards like lower targets in case you lose this level in the future and go lower, right? That is the scalp to swing mindset trade I kept talking about before. This is to the downside now, right? But what you're not going to do is, just as soon as you see here, just slap a big swing on, because you're just asking to get raided and chopped out on the higher time frame. Just don't do that, okay? If you do that, perhaps that's when you get the drop to this, right? And if this holds, perhaps you get the move up, right? That would also be the flip of all these B points, and then that would send you higher. But again, if you get here, you get no reaction to the downside, right? Aggressive buying is rewarded. You see that aggressive buyers are able to close above, right? You see that limit sell wars is just no match for the aggressive buying coming in, right? They're getting absolutely steamrolled. Then you have no reason to just blindly short for no reason, okay? If you close above this and you see maintenance above this, you're probably going to get another impulse up towards 102 to 105. Okay, and if you get above this, then you go and raid all-time highs. Maybe go towards like 120, 130, put a new high in, blow off top kind of scenario. That's when it comes in. Right, but for now, for where we currently are, like Caleb said, for me, this is a zone where I'm not going to do anything. 3-minute scalps, 1-minute scalps, sure, right? But in terms of like looking for like a trade with an actual plan, for me, the plan is either up here or down here for now, right? Here, I'm not going to execute anything with size. So either we confirm here as resistance for me to go lower, or we flip this, I'll take scalp longs up, or we just randomly get a pullback here. We get this retest first, and as long as it holds, I'll be looking for longs to these targets. But that's my thoughts on BTC. But I'm not going to be thinking about 70k, 68k, so on and so forth until we go and turn this back into resistance. Okay, that needs to be resistance for me to think about this. As long as we're at the top half of this box, there's no point thinking about the bottom half. Right? You're wasting your, let's say, energy, your mental capacity thinking about things that don't matter. As long as we're above this level does not matter. Okay, if you're going to go to this level, it's going to be way more obvious when this is resistance, right? Because even if you think you're going to enter here, your first thought should be, let's see what happens here, right? Because if you hold this as support, you're not going to get this, even if you enter here or here. Only when you lose this do you have a chance to go here, right? So that should be your cutoff point. As long as you're above this, there's no reason thinking about these targets, okay? You'll just fud yourself out from entering any decent pullbacks if you think with certainty we're going to go here. And yes, it's nice to have conviction like that, but, the trade-off is that in that case, you might get like a nice pullback, something like this, and a reclaim, and you still be thinking, oh, but we're going to get this. You're not going to enter anything, and then be left in the dust for the next move up because you think this has to happen, right? Nothing has to happen. We're not owed anything in the market. It's important to be able to pivot around these significant levels, right? This is what reading price action is all about, right? So again, that's your line in the sand there. As long as we're holding this, we're good for higher, in my opinion. But if you lose this, then no, it's going to be a bit peak. All the way down. Maybe we finally actually tap into this and stop these people out, right? But again, that's all dictated around this level. So that is Bitcoin. Let's take a look at some order flow stuff. So in terms of order flow, there is nothing bearish going on right now. If you look at the previous week, massive bullish delta, beautiful close, right? Aggressive sellers not rewarded, closed within your point of control, and if you zoom in, probably closed above your point of control as well. It's been that case. It's been that case pretty much on the whole move up, right, since that low. So there's nothing in terms of actual executed orders, right? People actually executing that indicates weakness for now. Let's see what else. So this week hasn't obviously closed yet, so that's fine. We don't need to focus on that. The weekly candles. The another thing to look at is, of course, the 3 months. Let's see what the 3 months look like. The 3-month close, right? So if we go to the 3 months, because obviously we had the 3-month close in March. The last 3-month close, of course, was obviously a very, very huge like selling candle, right? That much is very obvious. Your point of control is above you, right? And you have gone towards it, but you've not tapped the point of control yet. Remember, again, look, the point of control lies somewhere between 96k through to like 100k basically, right? So for your previous quarter close, if you, again, for me, it wouldn't make sense to reject our fear that the value, let's say, right? Why is the point of control specifically important? We're saying in this case, that's the area where most trades were executed, right? So in terms of fair value, it doesn't get fairer than that. So for me, I'd want to see a tap into that point of control, and then we can be like, okay, resistance, and if it's resistance, you've got, again, more thesis for downside, right? But for now, we haven't tapped it yet. So the 4 months is going to close in, let's take a look, in 2 days and 8 hours, and again, it's going to be very indecisive candle. Overall, the delta is very, very negative, but you are above your point of control, right? So again, indecisiveness in all fronts. You're above your point of control if you close like this, i.e. your most traded level, where the most volumes were executed, you close above that, which is bullish, right? And you're within your value area. It's not like you're going to be closing out of it if it closes like this, but if somehow, let's say in the next 2 days, if you manage to close above value area, even though we have this much negativity, right? If you manage to close above all of that, in my opinion, for the following 4 months, I think we see a move up. Why? Because you're saying you closed above your point of control, you closed above your most traded range, right? Even in the face of all of these aggressive sellers, right? So there's 103,000 and 0.83 contracts to the downside more than there were buyers, right? So that is how many sellers won out by so far. That is the margin, or that is the delta that is on the seller side, right? This is how much they have in excess, the selling pressure. And even in the face of all that, if you look at the candle, do you see a massive red candle, right? That is closing and taking out all the lows and closing at the low? No. Even in the face of all this aggressive selling, at the end of the day, the candle itself is undecisive, right? So in terms of the 4 months, this is literally fair game for now, fair game for both sides, because as long as you're above this now, that's going to provide support, right? But we also know the previous quarter point of controls above us, so that's why I think right now, like Caleb said again, indecisive area, very, very indecisive area. Because the 4 months for me, if you were to look at this, is that's the sign of bearishness, but then the actual candle anatomy itself, what it looks like is it's not bullish per se, but it's not bearish either. So it's not 100% like the sellers are winning out, right? Because even in the face of all that aggressive selling, if you take a look, you can see huge buybacks have come in. So i.e. the aggressive market sellers have not been able to overwhelm the passive limit buyers at these lows, right? So there is still demand and support there. So it's fair game. Yeah, I think that's why I'm just waiting around key triggers, right? I don't care if, I don't catch a big size short right at the top here. I don't care if I don't catch a big size long right at the bottom there. As long as I'm positioned correctly for the bulk of the move, that's all I care about, right? Which is why I'm not going to be taking any more sizable trades for now, right? It's like I built my positions up when we were doing the streams down over here, right? Like I said, as long as you've hit this at the end of the day, you haven't even retested like previous range. That is very, very bullish, right? I know that was a bit long-winded, but there was a lot of different ways I wanted to explain this, which is why we're doing it that way. In terms of points of control, this is TPO for a month. Why is it changing it? Oh wait, no, because they're all the same canvases. One sec. Right, I don't want a period that big. I want a daily period without where is it? Session, electronic, regular trading hours. There we go. The hell is electronic trading hours? Yeah, that's fine. Okay, regular trading hours. If you take a look at that. In terms of your time price opportunity, do we see anything that is negative? No. It's like all you have is literally P-shaped candles up. These are just showing you there's been strong trend days, right? Point of controls for every TPO and volume profile have been flipped to support and you've gone up. Have been flipped to support and you've gone up. Have been flipped to support and you've gone up. Right? So right now, this point of control was turned to resistance, but we still haven't had a structure shift yet in terms of the hourly, in terms of the 4 hours, so on and so forth on the TPO. So nothing in terms of order flow is showing massive weakness right now, right? So let's just see what happens. Yeah, nothing to be done here. Not every day is a let me catch the trade of my life day, okay? But that is a holistic look at Bitcoin from different approaches, right? Of course, I can show you guys diagonals as well. We've not done that in a while. Let's see what we have in terms of diagonals. In terms of diagonals, okay, so the thing we're looking at is this level here, right? As I said, as long as we are below this area, bearish, right? Look, for the exact same reasons as what we've highlighted already, right? This is the same reason that provided you with support. This was the same reason, sorry, that you were provided support down at these lows back in 2022, right? Once you lost that, you had the big drop. What did you do? You came back up. Once you rejected from that, you again had a big drop, and then you closed above, right? And now if you take a look at your historic trading range above the 702, 707, you're going to the 618. That is the range, right? You were at that range over here. So when you broke above, where did you go to again? You went to the top of that range historically, right? That is where you rejected off. So what we have now is, again, we have a how do you say this? We have a reclaim. Sorry, my mind went blank for a second. We have an attempted reclaim of that diagonal again, right? So if I was to turn, just don't be freaked out, guys. I'm going to put a few more lines on. There we go. 618 once again held. Right, you went up. So again, you're in the middle of a range. So as long as, again, you hold this, as you can see, you'll be reclaiming what was once resistance, what was once support, flip to resistance again, back as support. And in terms of that, by July, you've got intersections telling you might be seeing all-time highs again, right? That's only if by the time you get around, let's say, May, you're still holding this as support, in which case this is a possibility in terms of price and time, right? But if you get around July and you're below it, then I think you get that bigger drop once again towards 68. That's where the intersections would line up, right? And you get that retest around, let's say, like, you know, end of the third quarter, start of the fourth quarter, and then maybe after that, going into 2026, like, you know, we see some massive pumps, blow off top into the start of next year, and then after that, we get the pullback for the, you know, from second quarter onwards, maybe of 2026, right? One possible scenario. But again, as long as you're above this, you can't be overly bearish. Okay, because anytime we have been above this, right, you have, historically speaking, always tagged the 618. So we can't be surprised. As long as you maintain close above this, eventually you'll be looking for this move back to the upside. Okay. Now, to pair that with the fact, now if you take your macro downtrending diagonals, okay, I'm going to add one more line on. Please don't be freaked out. Just explain it as I'm doing it. If we do that, okay, so this is your fib speed found from that high to that low. Right? If we do that again, let's take a look. This is an intersection we were talking about, right? You had a intersection, i.e., you had a key area where two key diagonals were crossing up. It does not just have to be diagonals; it can be horizontals and diagonals as well. But basically, two significant levels, right? Your liquidity rate, in this case, the front run of your range extreme, 1.05, and also on top of that, your macro 618 of your previous cycle, a golden pocket, right? Both of those were intersecting over here. So what you have here is obviously you have that going for you in terms of price, but this is you're saying this is the most probabilistic time within which this would bottom, right? So we hit it at the right time, the intersection itself, and we treated it as support, right? That's all that's happened over here. So you got up, you flipped into the support over there, and that flip is what sent you high. So again, look, I said this intersection here, this is what we need to be above to be bullish, right? That was the whole reason I was telling you guys, look, this is not bullish over here. Right, because you kept staying under, but now as you can see, we've again broken above. So any pullbacks here for now, but you know, we have until the start of May to get down towards 89k again, right? But if you can now flip that into support and maintain it as support, then I think there is, you know, in time you can get by the end of May, start to June-ish, right? June to July-ish. If the first target would be towards the end of May. If you miss that target, I'd say more likely probably around July. We can see all-time highs again, right? In terms of intersections, they're there. In terms of diagonals and horizontals, you have time target along with your price target, right? So you can now start giving yourselves like, you know, in your head you can start giving yourselves like rough estimates about, okay, when could a certain move happen, right? And if the time horizon is not respected, then you just ignore that and you look for other time horizons that are possible, and then you can give yourself time targets to try and, you know, sort of know when you can take it a bit easier, or when would you like to be a bit more active, a bit more locked in, right? But for now, look, as long as this is support, like we were talking about back in March, right? Back in February, March, if this is now flipped into support, we're going to be going higher. Okay, so that's another thing. In terms of diagonals now, again, what was bearish has been very, very easily, this could turn into something very bullish now, as long as this is respected. Okay, so that is all the perspectives that I would like to give. And you could look at this in terms of like volume profiles, right? You could look at this in terms of so many different things. But for now, I think that's it, and then we can move on to like alts and stuff in a minute. Tanks. Okay, so let's take a look. That is that. We're going to be looking at that's BTC, and there's so many different forms of TA you can do on this, right? I've given you fibs, I've given you harmonics, I've given you you know, my own systems. Many of these are my own systems, apart from harmonics, that's not my own system, right? But everything else that we've gone over today is you know, there's volume profiles. I've got my own system for volume profiles too. If you look at this in terms of volume profiles, there's loads of key things with that too. So if you were to switch over to Binance, for example, and we were to take a look at this in terms of volume profiles, we're rejecting off value area highs, right? So this is your value area high for your previous two impulses. That's what we're rejecting off of. Your point of controls down over here. We front ran standard deviation 2 in terms of your bullish move up. You also rejected off macro fixed range volume profile. If you were to take it like this, if you were to do this, I'm going to do standard deviation 3 to begin with. Hang on, let's do this on the weekly. So if you were to do this, there we go. Another reason we're rejecting off this area, you just about hit your third standard deviation in terms of your macro on Binance, right? Macro fixed range volume profile, third standard deviation. So there's a lot of reasons why we could top out here, right? But to put all these together, to not get overwhelmed, you need certain lines that you know are going to be respected above all else. And those are the lines I gave to you just earlier when we were talking about it. Right? But we need to flip this into support if you want to go higher. There's loads of reasons here. Very, very indecisive area for sure. Because there's some factors telling you, well, if you have a slight pullback and we hold, we're going to go higher. Some factors like this, just horizontals now telling you if you cannot get above this, we will go lower. Right? So just if you feel overwhelmed, just come back to this video and just look over the harmonics and the actual key inflection areas plus buy seller zones I showed you at the start, right? As long as those lines are respected, you know where you're going to pivot to more downside, you know where you're going to hold the conviction that we might a bit go higher, right? Which is all in relation to, once again, to top it all off, it's just this. As long as you're above this, we're going to be going higher. If you get below this, that's when we're going lower, right? But that's Bitcoin. Let's move on to Ethereum next. Okay, so Ethereum bounced off. For now, trend hasn't shifted, nothing's changed, piece of shit, right? But at the end of the day, now these are not areas where you want to be completely saying, yeah, it's gonna definitely go lower again, right? You've hit very, very key levels. No matter how you look at it, Ethereum has hit very, very key areas. Both of these were, again, things we talked about in stream, right? I said this was the area that you need to hold if you want ETH to go back higher. We held it. Right, we've gone high. My entry on ETH right now is like 1,500, right? Because remember I said I got 6 figs in this. I closed as soon as we lost these levels, right? And then I just started to clear back in again at these areas here, right? So Ethereum, one thing that was very nice about Ethereum, if you go to look at this in terms of not wave structure and order flow again, is, and I put this in my own group as one of the reasons why I gave the entry bid down there a couple of weeks ago. If you take a look at order flow on Ethereum, there was something very fascinating happening here, right? Which was not happening on Bitcoin or many other roles. So if this just loads, we can go ahead and take a look at it. What we had happening on Ethereum, right? If you look at this on the weekly, is at a significant level, and your significant level in question is, hang on, is it index? No, it's probably this one, Bybit. Yeah, there we go. We can look at it in the Bybit chart, right? What was happening here is, as you can see, again, massive sell pressure came in this candle, right? Look at the weekly, look at the delta, negative 313.71k. That is excess. That is how much more sellers there were than buyers, right? Or rather, how much more selling volume there was than buying volume. Sellers won out by this much during this week. But if you look at the candle, take a look. Does it reflect what this is telling you? The answer is no, right? You have, for what it's worth, that is a really, really nice looking candle, right? You went all the way to that low, right? You had way more sellers than buyers coming in at the low, but look how you ended up closing. In the face of all this selling pressure, I will add, you ended up closing above the half of your point of control within your value area, right? Standard deviation 1 value area with an SFP, and this is an SFP to the upside, right? What we're saying here is there was some massive seller absorption going on during this week. So when I saw this was like, layering back into spot bid basically given, right? So this is ETH. Now again, this can get visited, right? This can get voided if even more selling pressure comes in. But that is the reason, right, why you then wonder why we had 517,025k selling pressure coming in, right? And why we had even more selling pressure than last week, and yet we couldn't even close below where the last week opened, right? You hold within the point of controls. So as long as this area now holds for ETH here, I think we bottomed, if not very close to one. If you go and turn this into resistance, then this piece of shit is going to keep dying, and maybe we see, if we go and take a look at this now, perhaps that is when we see like, $877 ETH, or a better option would be, if we take a look, go over here. Oh wait, no. If we go over here, better option would be 1,070 to 741, right? So you have 1,070, then you have 895, then 741. Don't rule it out, right? But only think about these targets again if you turn this area into resistance, where all that aggressive selling went on, right? If you lose that level and the point of control of that level and turn it into resistance, this is going to get hit. There's no ifs, buts, or maybes. It's going to get hit, right? Because look to the left. There's no other significant levels for you to bounce off of. Especially if this thing continues on with this downtrend, this is what I'd expect. Maybe a front run like Bitcoin just gave us, but this is the general area you're going to want to get hit on Ethereum. Okay. So, but as long as you're above this mid, your next target, like we said, is back towards here. 2030 all the way up to 2282. And if you can flip that into support, that is when you target 3k ETH, right? If you flip that, then you target 3,500 to 4,000 ETH, and then all-time highs, right? Again, at the end of the day, it might seem nonsensical, but in terms of wave structure, right? You guys know what I'm going to pull out if I'm talking about wave structure. In terms of wave structure, it's not out of the question. Okay, if you do this, take a look. You have hit 786s across the board, right? So the reason for saying one more drop is valid is because, of course, if you lose the 786, you might go and bottom at the 886, right? But now that is not much lower than where we've already bottomed anyway. So that would maybe if you got this, you know, I'd want to see like weekly bullish divergence coming in at the lows, right? That's the only acceptable scenario if you were to go and hit the 886. But otherwise, you know, we've hit 786s, that is deep value already. So if this isn't lost and turned to resistance, your next reason, your next logical thought should be, okay, we've got a 78.6% discount, right? And you had more. I'm just pivoting to the actual harmonic. Your actual discount you got was 84.3%, right? You can see right there, 84.3%. That was your actual discount, right? So if, and 1 second, that needs to be an 886 right there. 786, sorry. If this is the low, right, wave structure wise, your first target is going to be 4,776. Okay, if you get above this, you've got an ABCD and you've got a butterfly going to 1.272. I'm not going to give you targets of 10k ETH, right? I don't think we're going to get that this cycle, maybe even next cycle, who knows, right? But this, I wouldn't say this is out of the question, right? That's why this is the first one. Rate all-time highs. Give yourself a wave structure target that is valid, right? 1.272. If you flip that into support, however, do not be surprised if you get that basically 6k ETH, right? 5,889, 5,953. And of course, like I said, this can make one more low at the 886 before we go to these. But even if you hit the 886, right, these two targets at the top, well, this one won't be valid, so ignore that. That 786 won't be valid. But this butterfly, that would still be valid. And that is the most current wave structure. That's the important thing, okay? And if you hit the 886, that 786 is just going to turn into an 886. So we're going to pull this down to the 1.13, right? Let's say we were to hit the 886 again. Just a bit of foresight, right? If you get an 886, you're looking for the 1.13. So it's not like your targets change drastically, right? You'll still be getting 4,461 ETH, which, you know, let's say you did get the 886 and you were to try to build spot positions there, it's still going to give you a 250% pump minimum, in my opinion, right, compared to this ABCD, which for a high cap like ETH, where you can put larger money, that's an amazing return, right? So Ethereum, the problem is this thing's just not catching any bids whatsoever, right? We know that, so it's what it is. But you know, that's the reason I entered here, right? We hit key levels, we hit key fib ratios, and we're at places where risk was so easy to manage, like we kept talking about, right? And it was very, very also easy to try and give yourself targets, macro targets, so you don't even have to overtrade, right? For your higher time frame spot back swing longs, you just enter it and you get stopped out, right? But if you go in the green, you put your stop loss to break even, and now it's risk-free trade. So I either just hold, or I get stopped out at break even and I just look for another trade entry. But you know, it's easy to manage now, right? But these are targets that, you know, it might seem impossible now, but hey, let me give you some. Once again, like when I gave you guys the total one target, did that seem possible, right? If you go to master list, if you go to total one, ABCDs, right? Where did we end up topping out? It was that 0.5, 2.0, 786, 1.272. These targets were given a while in advance. We looked at this a lot in advance, right? It didn't look possible when Bitcoin was down over here, when Bitcoin was down over here. In this case, total one was. But guess what? We topped out eventually. So it's all perspective, right? If you look at the 15 minutes, it might seem impossible, but then you look at the weekly, the monthly, and you realize, well, this can definitely happen. I just need to expand my horizon a bit, right? Same thing with Bitcoin, right? Where do we know we topped out ultimately? If I was to go on to focus, right, we will pull out the index chart again. Ultimately, we know the area where we topped out was the ABCD 2.24 and 2.618. And again, these were targets given way ahead of time, before this, we even got this pump up, right? We said, okay, we have a 382, so if that 382 is the low, then your first target is the 2.24. That is where you went originally, right? If we could take a look at the daily, right? Look, your big first SIP came over there, right? And after the 2.24 is the 2.618, right? And that hit. It didn't hit on the index chart, but on Binance, on Bybit, the 2.618 hit, right? So again, it might have seemed impossible down over here, but all you had to do was zoom out. Those were where you topped out. So in the same manner, right? This might seem impossible now. It might seem like, what the hell are you talking about, right? But all it takes is a few, now for the entire market to definitely pivot bullish, you know, the fear and greed index goes all the way to greed, right? You have just money flowing in, good news after good news, just a few months of just straight up euphoria. Next thing you know, your alerts are going off for, you know, 4,500 ETH, 4,700 ETH, like 5,000 ETH, so on and so forth. Telling you, don't rule it out, right? Just because something's underperforming now does not mean that's going to be the trend for the rest of his life, right? Just my thoughts on ETH there as well. So let's take a look. Any more? No, not there. Right, that's Ethereum. Let's take a look at Solana next. Let's go here. Actually, let's look at Solana here first. Solana 702, basically 707, right? 1.414 is the extension. If that is the low, then you're looking at that 1.414. Right, which is going to give you a target of about $378 Solana. Again, what you are doing is you're within HPR2. So as long as you're within HPR2, the price you're focused on is 169.94, 258.56, with deviations down to 48.37 and up to 180.09. Okay. Ultimately, though, would you enter Solana here? Hopefully, you guys are looking at this and saying no, right? Because now, wait, hang on. For Solana to go any higher, this needs to be support. Okay, if this is support, then you're going to be within this range, and great, you know, you can go and trade Solana. You can go and enter it, right? If you go here and it's resistance, you're going to have a really nice opportunity to short. Okay, so just put these levels down. 160, you know, 180, so that's going to be around 170 is around, basically around the mid. So basically that, right? 160 to 180, and then 170 is your mid. If you see in those three distinct levels, especially from 160 to 170, you see SFPs, no closes above, there's going to be your triggers to try and look for shorts. Okay. But Solana now, why did it bounce from that area? Right, it's not random. The chart you guys will be familiar with is this one. Well, always said, if you ever go and turn this into resistance, 133 to 126, your next yearly levels are at 102 down to 78. Okay, so you hit two of them. My entry right now on Solana, fresh one, is 100. I've got a swing open from there. Okay, and Solana, AVAX, ETH, BTC, right? SWI, say the ones we usually go over, these are my more sizable bags, right? Cetus, my top 10s, these are more sizable bags. So 100 was my average. So I didn't get the exact 94 because I didn't have a limit for this one. It was alerts, right? So by the time the alert popped off and I moved on to the soul chart, it already moved up a tiny bit from the impulse. So 100 is my entry for this for now, but I'm not complaining because at the end of the day, even from 100, that is still a 56% gain overall within like 2 or 3 weeks, right? There's no bank that's giving you those type of returns. So, and in terms of this, again, as you can see, in terms of key levels, now you're in the middle of nowhere, right? You do have, the reason you're rejecting here is your current bull market impulse mid is been used as resistance. Not a good look for now. Okay, so until you flip that, you're not going to be going higher anyway. But in terms of yearly levels now, your next yearly level is once again 133 to 126. So if you get a pullback towards this zone, okay, like that, if you get a pullback there, and it's successful, that's where you're going to be bidding. It's not too late. Don't feel sad because you missed this. Just zoom out, right? Look, if you on a higher time perspective, if you are going to go to 380, 400, $500 plus, right? You're not going to complain if your entry is over here, and for now, let's just pin it to 400, okay? Or over here. Right, it's 200 versus like 300%. So yes, it's a bit of a difference, but you're still making a 200% gain on your portfolio here, right? So it's like this is just how markets work, right? The more emotions is involved, the less auctions you get, right? It's the same thing. The lower you go, the less and less people are willing to buy, right? That's something you have to overcome for yourself. No one can. I can give you all the significant levels you want, right? But to have faith in these significant levels, that's up to you. You got to try them out, right? You got to see do they work or not. And more importantly, you got to be able to, on your own two hands, with your own two eyes, with your own brain, be able to look at this and say, does this look good or not? You can't just keep relying on what other people are saying forever, right? So I can give you, like, every single week I've been given the same significant levels, nothing's changed, right? But if people still don't pull the trigger when price goes to those levels, I can't do anything, right? So the best I can do is give you those significant levels and tell you what scenario am I looking for to enter. We did those for ages for many of these coins, right? So if it's up to you ultimately, however, to then take away from that what you will. What's going to be your strategy, right? I told you what I'm looking at. What I'm doing might not be the best for what you're doing, right? You got to consider what's the best situation for you, but you're going to do so around these significant levels because everything you do needs to be around significant levels, okay? So Right now, pullbacks for bids on Sol, otherwise just wait for a reclaim of this or something like that, right? Reclaim that, get above that blue line, and ultimately, look, at the end of the day, you're at 150, right? If you enter a spot here, like I've been saying, your risk management is not good. It's not good whatsoever. At a basic case, it's going to be something like this, 18%, and if you want to do it properly, 36%. There's no point entering here, none. So just wait until you get this, right? For lower time frame, maybe like, 1 hour entry models, if you flip this line into support, literally just take a fib retracement from that low to that high to 0.5, okay? But otherwise, for the bigger size positions, for the bigger moves, you want to flip this into support here, right? That's what we were talking about. Basically 160 to 180. If you flip 160 to 170 zone into support, you're looking for bids up towards range highs again. So that is Solana. Let me do this, delete, delete, delete. Okay, but that is Sol. Again, beautiful reaction, very, very nice reaction, but at resistance. Nothing to be done at resistance, okay? This is not an area where you would swing short, right? You wouldn't swing short. I had a scalp I gave, right? I had a scalp I gave before. The same trade, this is the same trade I gave over here as well, 8th of March. I gave this one short over here too. Same trade again, right? Just got a scalp going currently, but it's already off my entries, right? So it's already a bit off my entries. Currently at a risk to reward of 2.09. For me, it has to be minimum 3, so my stop losses are break even. It's just a little hedge, right? Looking to basically get this area, like we said, like 130 something. If we can flip this into support, right, which is going to line up with this, we look for highs. I've got to be adding more size, right? My trend shift allocation hasn't been added yet, so when the trend shift allocation gets added, I'll be fully positioned. I've got 30% left to add. Otherwise, wait for a flip of this to enter. Right? There's no point entering here. Resistance, as you can see. Below this level, always down, 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 down. So, if you still decide to enter after this, you can manage your own risks, right? Because there's no way that I'd manage my risks based off this. Entry here there's no risk management to be had. That's Solana. Okay, so that's that, and we can look at AVAX as well, right? Let's take a look at AVAX. Let's take a look. So AVAX looks really, really good. Still not shifted his trend, and that's annoying. I really wanted this to actually go and take out his trend, right? So I give this as a signal. Well, I've been giving this as a signal for a long time, right? For people who, in this stream as well, for people who visit the streams here. But I also gave it as a proper signal a week or two ago now, two weeks ago, something like that. I think I forget the exact date. It might be more recent, but as a signal on my own server too, because of this. Right, so let me give you the macro view first. So of course you guys are already familiar with this one, right? This is the same reason I told you guys to buy AVAX 24th of August, right? It's on YouTube again, same as here. We went on stream. I told you guys this is looking very, very good. That's a successful type to retest. You can get into AVAX to try and target these highs minimum, right? So we got that, we got those targets, and we're back down to those areas again. So you have a macro bat XABCD. That's an 886 right there. You reclaimed that bat into support, and the 86 is what you gave the type 2 return off, right? So here was your here was your terminal 1 like reaction, right? So you went and hit your terminal 1 zone, gave the pullback. Here's your type 2 return. The type 2 return was successful. What did you flip into support perfectly? Again, the macro bat 886, right? That was given to you all the way in 2022. You flipped into support again mid 2024, right? That sent you up back to your terminal 1 zone, right? And you rejected. Right, so this is the move that we caught on AVAX, and if any of you, a few of you there, I know Mecha Brew's always here. I know that Rohan's always here. I know Miranda's always here. If you guys remember me talking about this back in here, I was saying people are going to ignore this. They're not going to enter AVAX here, and they're going to start asking me for AVAX entries when we're at 40, 50. Right? Is that not what happened or not? Right? When we were up here, everyone was like, "Oh, do you have a good entry for AVAX?" And there was nothing for me to give because I'm not going to tell you to enter at a place where I'm going to be selling on you. Right, this is not a good place to enter AVAX. Right, you're at a premium of 171%. Right, so now what we had after that drop, right, pull back, came back down to the macro bat 886. Okay, right there. What have we got with this now? Take a look. We have an 881, basically an 886, right? 516, 1.618. Okay, what we have here is a deep crab. Okay, that's a deep crab. So you have now an extra level to mark as a PRZ. So you have here again a potential reversal zone. If you hold this as support, you're saying in terms of your wave structure, right? That's where you're expecting the bottom to come in. What did we do? We held it, we raided, and then we bullishly engulfed the last bearish candle. Right? Beautiful. Now, based on this, right, we know in terms of harmonic targets, what do we have? If you take the A2D, right, and in this case, I'm just taking the full profile. Your terminal 1 is right here. We've hit that, right? If your type 2 is successful, this is still a part of the ongoing type 2 return, right? Because we haven't broken above yet, so this is entire now. Again, this is nearly a 2-year wave structure, right? It will be if we go into 2026 and we're still chopping here. But this is a wave structure telling you now, right? Especially from here, so 2024, so August 2024. Sorry, it's not 2 year. This wave structure in terms of a type 2 return is from 2024 March. So 2025 April. So it's been a year, right? It's been a year. We have a year now of just saying that this is still a part of the type 2 return, right? The original PRZ is still respected, which means your original targets are still in play. So the primary projection, right? Your terminal 2 for this, sorry, i.e. your second target, the targets that you typically get when you finally get your type 2 test, right? So here's your completed shape in terms of harmonics, right? There's your reclaim, PRZ confirmed, right? There you go up. This is your type 1 reaction, okay? You hit your terminal 1 zone. Here is your type 2 return, right? And you go back up to terminal 1 zone for now again type 2 return, right? Still a part of the macro wave structure that is a type 2 return. If the type 2 return is successful, which it's been so far both these times, right? Eventually what you're going to do is you're going to go for the primary target. That's going to be this right up here, this 618. 94.14 is the target to hit for AVAX based off this wave structure that we have. Multi-year wave structure. This wave structure started from 2020, is still ongoing in 2025. Okay, 5 years in the making. Remember, harmonics are not affected by time, simply price. Okay, so we have that going for us, right? Now, if you ever go and flip this into support, the primary projection for this is going to be at 232. So this is for now a very, very deep extension, right? And I'm not going to say we're definitely going to go to 232, but we're going to leave this on as a level for should we ever go here, we have a reason why, right? Of course, we have other levels to worry about on the way up. But should we flip all those levels into support, ultimately for the target right now ultimately is the 1.618, right? The primary projection of this wave structure here, 232.53, right? Now, on top of that, we also have, of course, this crab, right? This crab, we can take its own. So from this to this, that's your range, right? So for this range, you have, actually, you know what? Let me even turn this off for now, Let me turn this off for now. We're going to come back to this, okay? We're going to come back to this. It's going to make more sense doing it this way. One sec. And this and this. We're going to come back to that, okay? So let's just leave this on for now on the macro. So do we have now any other reasons why we could go up here rather than just saying, oh, well, the 618 is here? Well, sure we do, right? If we now take a look at what wave structures we are currently in the process of potentially making. First things first. There we go. XAB, that gives you a 0.41, right? That C is an 886. Note, deep value has been achieved. Okay, compared to that low from 2023, you've had an 86.6% retracement. If you still get here and you want lower, you are being a greedy little shit, okay? You want to bid when you get to the 886. You're saying this asset's had a retracement of 88.6%. That is value, okay? That is very, very deep value. So if this 86 is respected, right, of course your first target is going to be the B again, which is going to give you 65.90, right? Somewhere around there anyway. 65.39, right? And if you ever go and you flip this B point into support, we're going to be triggering something called a BAMM. Okay, this stands for a bat action magnetic move. What that does basically is it might take a while, right? It might take a while for you to grind up to this B level, right? You might chop, but when you get that flip, it's all of a sudden like this thing's just taking a shit ton of Adderall and speed, right? It's just gonna absolutely rocket up. The time of this expansion is going to be way less, right, typically speaking, than the time of actually going to flip that level, right? This is where you get your serious expansive phases, right? This is sort of like, when you're on the move up, you're getting your chop up, retrace, and then boom, one blow off top, right? That's going to be akin to that one blow off top candle. Well, like, you're gonna cover this distance in like 2 to 3 weeklies or something like this, right? So we're going to trigger a BAM of this. Of course, this is all just for now hypotheticals, because now these are not even completed harmonic structures, right? But we're now trying to do everything in nuance, right? We're saying we have all this, there's a reason why this could be a good bottom. So if that's the case, then why could this not play in the future, right? So there's reason number one. That gives you a target of 131.28. Number two, is this one right over here. Okay, from this peak, XABCD, again, 478, 886, 886, same thing, it's a bat. And again, should you go and flip that into support, you're going to get the bat action magnetic move. This is going to take you to 113.97. Right, so let's turn that off. The next one is right over here. Okay, so the first thing this can be is very close to a 618, right? Okay, so the first thing that this thing can be is, okay, a godly. Okay, 786, that's all within the realms of a godly. So your target is in 83.31, right, in terms of this. But should you ever get above this, get above these levels here, then you have an extension target. Okay, you have an extension target. A godly can turn into a crab, right? Normal crab, 1.618 extension, that is 162.32 AVAX. Okay, so now you're taking a look and you're saying, as long as we bottom out here and we don't violate these lows irreparably, right? You now have wave structure after wave structure after wave structure telling you, like, why would you just expect this to go lower, right? If you're gonna get that bullish impulse in the market now, this is even on a very conservative basis, I'd say 83.31 AVAX. Are you realistically, even from here, right? I'm not gonna tell you to buy right now, right? But even from here, that is a basically 300% move up to your quarterly target, right? From here, the 618 is a 337. If you get the bat, it's 417. If you get the bat, it's 507. If you would, like, you know, pray, God willing, if you were to get 646%, if you hit the 1.618, right? So AVAX on a macro looks absolutely phenomenal, right? I know I've been sucking this thing off last September, and you know it worked, right? And I'm sucking it off again, right? AVAX looks good, right? Not good in terms of, oh, you know, this looks like, you know, it's in a serious uptrend. No, good in terms of, especially over here when we were talking about it again, March, right, start of April, we were talking about this, saying, look, AVAX still looks good, guys. It's back at the areas I'm bidding, right? We're already up a fair amount from there in terms of like local moves, right? So from here, we're entered, we're already up like 44%, right? It's good in terms of risk management, especially when we're talking about this back here was so easy, right? And if you are right, you are literally pinging the bottom of this to just hold to try and take to the top. And again, you did not even have to go all in here because the trend for AVAX is still to the downside. Okay. So let me lock these in place again, right? So we have all this. Now let me add this on. Okay. So the thing I turned off earlier, which is this, right? Let me turn these two and this back on. With the addition of this harmonic now, right? For my spot bids and my swing longs that I entered down over here, I'm not going to be TPing at these areas. Okay, I'll either get stopped at break even, or if you've done, let's say, like a minimum 2 to 3x, like a 2.5 to 3x, I'll start shaving some profits off, right? But until we get to those levels of gains, my stop loss is simply going to be a break even. Because for me, I would much rather get stopped at break even and not secure any profits, right? Because I've got minimum six-figure positions open on all of my top coins. I've already told you guys this before, but all my top coins, I've got minimum six-figure positions open. That's why they're my top coins, right? My sizable bets are going on in there. I would much rather get stopped at break even, right? And just not gain 40%, right? What's that, 40k, right? Then miss out on turning it into something extraordinary just because I was too jumpy with the TP, right? For my spots, I'm not going to be TPing anything here. I'm risk free, but I'm not TPing anything. Look, full disclaimer: you don't have to do this if you like, you know, if you can't afford to get back to the market. Okay, but for me, like, I'm good, right? If you get stopped at break even, I don't care. I don't care if I don't make any profits right now. I'll simply just rebid again when this looks good. Because for me, taking 40k profits, reducing my position size, only to realize this thing is gonna go to your to intended targets is way more painful, way more painful than taking profits than getting stopped at break even. Okay, but that is also why I always say, for your longer time frame trades, make them separate compared to your medium or shorter time frame trades. So now for your just, you know, scalp trading or intraday trading, I'll be looking for this. I won't enter yet, right? There's one thing we need to do, right? Like I said, trend is still to the downside. This thing right here, we need to take this fucker out. Okay, the last lower high that led to the lower low, we need to take this out. I don't care if we hit the T2 first, but I'm only going to be entering fresh leverage plays on AVAX once we shift trend, right? Once we change, or rather once we shift the trend and then actually confirm the higher low. Okay, because remember, I'm never going to be fully positioned on the wrong side of the market. Even for my spot, I'm not fully positioned yet. Like I said, I've got 30% left to allocate. Okay, I'm only going to be allocating that when trend shifts. It doesn't make sense, again, to be fully positioned when the market hasn't shifted back to an uptrend. You're trying to catch a falling knife. Okay, so if we take this out, all you're waiting is for like a high low to come in, right? And then wherever the high low comes in, that's where you're going to be entering with stop loss below, like your retest wick close, right? And then you can TP on this. If it flips, you can leverage trade on your way up. You're going to have a separate account for that though, right? Because if you do that with your main account, you're going to ruin your entry up, and you might be stopped out before you get your big move out, right? So whether it's for leverage not quite ready yet, right? If you're looking for fresh leverage plays, it's not quite ready yet on AVAX. We just need to shift the trend, right? But whether it's for leverage or spot, this thing is looking very, very good to put in a potentially massive cook. Okay, AVAX. Again, don't expect this to happen in 2 weeks or a month. Right, I'm looking at multi-year wave structures, and again, it might, the wave structures might conclude within like a quarter, right? If you're bullish enough, but there's no guarantees in time frame, right? So that's why when you do get to these key areas and you're up and you see that number that is unrealized is something you're happy with, and you could put to work, you could use to pay off your bills, you could use to pay off debt. It's up to you to pull that trigger to sell. Okay, you better sell. Because at the end of the day, unrealized gains is nothing. It's about how much you've actually realized. Okay, but yeah, the upside potential for this thing is massive, especially if we shift trend here. This thing has room to go. If we don't shift trend, we could violate this 886, right? But I wouldn't care, because eventually when we do reclaim, right, we can just run all this back again, right? But for now, AVAX does look good. Okay, so again, this is not, don't enter fresh. You're at resistance, in terms of like, at resistance, plus you haven't shifted trend yet. So if you put in the lower high yet, you're just going to be in the red in the short term, right? It's going to be short term pain. So might as well just wait for the trend to shift at this point, right? But AVAX is another cook that looks absolutely incredible in my opinion. Yeah, AVAX is a cook. So we have that, right? There's so much we can look at, right? Say looks similar to AVAX, right? Same thing. What were we talking about on Say? We were talking about how if we lose that macro shark 886, we're gonna get that consolidation range mid. Like, guess what we got? That 1.13 consolidation range mid. Again, go back, check my video, check my streams if you don't believe me. But these were the levels we said we're gonna bid. Say we got that, I bid, right? Again, trend hasn't shifted yet. Yeah, look. They left it very shy. The trend hasn't shifted yet, right? So again, for fresh leverage plays, I'd wait for that trend to shift, wait for a high low to come in and then get in. But say is another one that looks like it could cook very, very well. SWE, we don't need to talk about this one. SWE absolutely sent, right? Again, we had the bat we were looking at before. Same thing. You put in a smiley face here, breakout retest. We were talking about this in a stream, right? You broke out, you retested. Smiley face, that smiley face sent you, right? Because what is you above the shark 886, above this you're gonna go up. And this is also the reason why things like Deep, things like Walrus, things like Cetus have been sending, right? Specifically Cetus. This is the one I talked about with you guys a lot. If we go here and we go to Cetus, where is it? This thing is up huge, right? 2x already. There we go. We talked about Cetus as in, there's your M shape, right? There's your bat. As long as the bat is not violated and you see the structure is telling you, right? You see the structure is telling you the bat is support, right? The bat is support. You've got smiley faces coming in. You're going to bid that bat, right? So the bat got bid and we sent up. So my average entry on this is 0.08, right? And I gave a more recent call in my own server a few days ago before this pump, about a week ago now, I think, something like that, at 0.112. Yeah, that was it. 110% up since then. Hit T1, right? So that's your first target of the bat. That's been hit. After this target hits, we can't be surprised with the T2. And if we get that, again, I've got my trend shift allocation left. You guys know my entry model, which is 20, 40, 40, right? And again, you're going to shift that around depending on your risk management. So since my stop loss was literally like 3 or 4% away, right? I'm going to make this 40 to 50%, and then I'm going to make this, let's say 25, 25, right? If you're going to go with 50. So I've got my trend shift allocation, which is 25% plus 5% remaining of my size up allocation left together, 30% to size up with on any higher lows we get now, right? And once that happens, right, that's it. You're fully positioned, stop loss to break even, you're on the right side of the market, and then you just run it for the rest of the move up. If it doesn't give me that pullback, right, for the higher low, I will just take the allocation, rotate it into something else. It doesn't matter, right? But this one was a cook. So see, like I said, we talked about these entries for absolutely ages, right? Look, you came here, you hit the 86 on the start of March, and you stayed here till mid-April, right? That is a good 45, 50 days you had to actually like take the weekly stream seriously, look at the levels and be like, you know what, yeah, this guy's right. It's easy to manage my risk. I'm going to at least, what did I tell you guys? You don't have to go all in, right? At least, like, use 20, 40, 40, and your initial size is going to be based on your invalidation, right? Invalidation would have been below this wick minimum. or sorry, below this week minimum, below this maximum if you wanted to play the whole range, right? Either way, you would have gone minimum 35-40% in at your entries down over here, right? And then when you see local resistance is being flipped to support, 86 flipped to support, right? Break above an acceptance above the value area high, for example, things like this, then you would size up some more, right? That's your size up allocation. The only thing you wouldn't have used so far is your trend shift. And again, these are the same scenarios we've gone over time and time and time and time and time again each stream, literally on a weekly basis. So I think one phenomenon is many people look at the streams, but then they don't execute, right? And I understand that my system might be a bit confusing because everything I've done, I've created for myself, right? If you're talking in terms of how long it took me to create my own system, it's more than a decade, right? I've been in the markets for a very long time, right? I've just not been an analyst for a long time. I only became an analyst like basically 2021 onwards, right? But in terms of actually being in the market, trading, having exposure to it because of family members, so on and so forth, it's been more than a decade I've been creating my own system, right? So I understand it might be confusing, but like, you know, if you take the time to try and at least decipher it, and even if you don't like, you know, like what I say or do in the charts, right? If you at least take a heed of, okay, this guy's saying it looks good, does it look good, and maybe impose your own system into it and see, do you agree or not? I doubt there was any system in the world that told you CETAs was bearish here, right? Unless you were looking at the actual, like, you know, lower time frame, you know, bullshit ICT concepts, in which case, yeah, you know, you're like, oh, you know, whatever, right? But in terms of like serious decades old proven concepts, you're at the 886, you're putting in Wyckoff accumulation, you're putting in smiley faces, right? Everything over here was telling you CETAs look good. That's why this is one of the coins we went over on a weekly basis, right? Every stream. And on top of that, more videos are released from other servers, like, you know, YouTube. We went over this every single time. So this was extremely well cooked for anyone that took it. But there's so much, right? If that's the thing, if you miss CETAs, who cares, bro? Like, who cares? Look, there's ENA, right? There's TON. Look, there's Litecoin, right? There's AVAX, like we just went over. POW. There's SEI, right? CRV, another one we went over that did well. ARVE, this one looks good. Hang on, I should be in this one. Right, ARVE, this one looks fantastic, right? I just want to flip of this red box. If you get this flip of this red box on ARVE, I'm going to be bidding some more, right? For the same reasons as AVAX, all harmonics, right? Again, this might look confusing, but just understand they're all just wave structures, right? If I was to do this one after the other, all you'd realize is I'm just putting wave structures down, right? But ARVE looks fantastic. Like Aero is another one that looks good. This one had a nice pump too, right? Aero looks good. There's so many, right? FET, that looked amazing. We had amazing harmonic on this, 886. Again, same thing, right? You've broken up. So if you come back down to put a higher low anywhere around there, because the trend shifted now, right? Look, the trend shifted. You don't be complacent. The trend is shifted. If you get a decent pullback, right, and you see resistance being flipped to support, you bid. Because look, you're saying the last lower high, the later lower low has been taken out, right? So you're just waiting for the higher low to add more, right? There's so many coins that look like this. A cash network, right? Not really moved off yet. So there's so many, right? There's so many. This is one I'm keeping an eye on. Might be a bid here, to be honest, right? If we do this, one sec. Yeah, that might be a kook. I'll say we wait for the 4-month close, or if you wait for the daily to close to begin to, like, you know, your initial entry, and your stops would be something like this. Might get rated 15% risk, so maybe 30% initial, right? And you have 35 left to DCA/size up, and then a trend shift allocation, and then TP. Well, if it's a new project like this in a bull market, all-time highs/extensions of all-time highs. So for now, I'll just put it to there. But this is now a more low cap coin I'm looking at. Okay. But yeah, let's take a look. That one there's not bad. You wouldn't go all in here, and this would be for spot, not leverage. Okay. But I might throw like for like just like a low cap play, right? Not much, maybe like 10k into this and just forget about it. Either stops hit or one day my TP hits a profit. Yeah, but yeah, guys. So hopefully, like the point of showing you all that was to show you there's so many structures, right? Pepe, another one holding the 886, right? Tia. We talked about this at these lows, guys. Like last stream, I know my bro Rohan took a play off this one, right? We literally talked about this, saying, look, T has hit a 2.618 extension. You're at the lows, volume profile wise, you're at the lows. This would be an amazing entry down over here, right? So Tia hit the play. I know my bro Rohan took this one. I didn't enter Tia at this low, right? I missed this one at this low, but I don't care, right? And nor should any of you, because if this now reclaims here, then, you know, realistically, again, it doesn't matter if you bought Tia here or here, somewhere in this range, if you're looking to now target external liquidity. So like, you know, point of control, value area high, 382, and then eventually 618, you wouldn't care where you entered, right? But yeah, there's so many, right? Tara, Dot, back at resistance, Aptos, like we looked at that, right? Fartcoin, this one was a cook. If you're talking cooks, Fartcoin, look, this one was a absolute banger. I'm up literally like mid 6 figures on Fartcoin spot. And again, this is something we went over so often in streams, saying, look, we're putting a cumulative structure here, right? We did it. And then boom, you broke out, and now, you know, shifted trend, last level high, that little lower low got taken out, higher low started coming in, right? And then yeah, just sent after that. But yeah, so there's so many. The key point is here, right? If you feel like you missed out, don't, right? Realistically, like nothing's much has happened yet. Yes, you missed out on the initial pumps, but that's all there is to it. Many things haven't even shifted trends yet. They've taken out the last lower highs, but they haven't put the higher lows in. Be on the watch for those higher lows, okay? Be on the watch for those higher lows. And Hype is another one actually that did really, really well. The thing we talked about was the 786. I said if you lose the 11.84, we hit the 786, right? So I'm in on this from $9.90. Again, I didn't get the exact bottom because I didn't have a limit set. All my alerts went off. I was, you know, frantically sat there fingering the buy button on my phone. But this is another thing now that has shifted trend. Okay, take a look. Last level high, that little lower low has been taken out. Okay, so if a high low comes in here, or even if you get one more sizable pullback over here somewhere, all you're looking for is a high low. Okay, that high low is where you bid Hype, because now the structure has shifted, and you'd be targeting just moves to the upside again, right? But yeah, there's so many coins. Like all the coins we've gone over all this time, those are the only ones I'm really looking at. I'm not going to be trading like a million different coins. But Aptos, many things look good, right? So if you guys feel like, again, you missed out, don't, right? Look, Aptos still doing lower lows and lower highs for now, right? Still, there's some work to be done for this to even shift trend, right? And we only really go parabolic once the trend shift's confirmed most of the time, right? Many coins are doing this, so just keep that in mind. Well, however, I do reiterate, okay? Please do not lean completely towards a bullish side or a bearish side, okay? Given the fact that many of these, right, alts are on the verge of flipping their trends, right? So things like Fed, things like you know, Hype, things that have taken out the last level highs that led to the higher lows. If those do now, you see those putting in retracements to, like, you know, previous resistances, right? And you see buyers are stepping in. Then just think about it logically. You've shifted trend. Your first sign, you're going from the left side of the V, which is the sell side, to the right side of the V, which is the buy side, right? It's going on. Risk to reward wise, it's going to be favoring to the upside. So why would you then not bid there? If you don't even bid there when the market gives you that final entry opportunity, then you're gonna have to wait, because if you go parabolic from there, right, you're not gonna get a decent entry after this, right? I'm not gonna be giving any entries once the full bull market comes around, right? And with any spot entries anyway, I'll be giving like some scalps here and there on my streams, but I don't typically call scalps anyway, right? So I won't be very active again once everything goes green. You guys know I don't actually get very active when the market's completely going up or completely going down. I'm most active when we look like we bottom out, we look like we're topping out, right? So once we go fully green again, you know, I'll do my streams when I'm free, and, you know, I'll just update with TPs for the people who did enter, right? But I'm not going to be stressing about, you know, finding entries for this and that. We're going to be positioned before that, okay? So in the same vein, if you see that flip happening, okay, please, at least, even if you're scared to go all in, like never go all in anyway, but even if you're scared to go all in with the allocation for that project, employ what I say, 20, 40, 40, and you change the ratios depending on how far away your invalidation is, right? So if you come down to your entry and your invalidation is, let's say, 5% away, you can go 40%, 50% entry, right, for your initial, and then the remaining two you split. For example, if you went 50% entry for your CMP, then you have 25% left to DCA/size up with, and 25% left to add on the trend shift. But since we are now actually flipping the trend, you don't really want a trend shift allocation, right? So your trend shift, you're going to actually throw onto your DCA, so you're going to have two entries, right? You're gonna split it into initial entry, which is, let's say, 50%, and the final 50% is going to be for DCAs. But if you don't ever hit your DCAs and you see we're not going to hit it, just size up with that anyway, right? It's going to be harder to manage your risk because again, now we're off the lows, right? But it's still not too late where it's impossible, right? But it's going to be impossible to manage your risk once these things start putting in monthly, like, 50%, 80%, 100% candles, right? It's going to be absolutely impossible to manage risk in that scenario. So, with that being said, that is everything I wanted to go over today. The CETUS one, right, and a couple more. Yeah, I'm glad you did, Miranda. So that one was, I know the stream was a bit out of the left field. It was meant to be tomorrow, but like I said, I'll be busy tomorrow, so that's why I had to move it today. I didn't want to not stream for 3 weeks straight. The reason I've not been able to stream recently is because obviously I'm finalizing the close of the restaurant, right? So I'm getting a second location open. We're just agreeing on like the lease terms and so on and so forth with the landlord who's renting the building. So that I've just been busy with that. But yeah, that's basically done now. It's going to be open. We're going to get the place by like August, right? Early August. And then I'll be away in Asia for like 6 to 8 weeks after that to just relax for a bit and then come back mid-October, like mid to late October. And then we'll have 2 locations open, and we're thinking of getting a third one sometime next year too. So that's going to be a bit more busy during that time. But until then, right, when I'm not doing things for my real life stuff like that, I'll be active, right? But yeah, that was it. So did you guys enjoy that stream? Yeah, bro, of course, man, of course. If you're one of my clients, come, but food's on me, man. You don't have to pay. That's one of the things I'm thinking of doing. One of the perks for the bunker. Yeah. But yeah. So hopefully you guys enjoyed that session. If you have any questions that come up, like if you want me to look at a chart for you that you've done or something like this, just ping me in chat, okay? And no problem at all, guys. Thanks for being here. I appreciate your time. And I will be streaming next week. I won't be busy next week. Probably either Monday or Tuesday. I'll stream next week again. Unless something absolutely crazy happens, then I'll update again. But the main takeaway from today should be the BTC thing. Okay. The two main takeaways today: do not go into BTC right now. In my opinion, you will get chopped up unless you know what you're doing on the lower time frame. Right. Wait for those key levels to get hit, one or the other first. Or and the second time frame and the second thing, key takeaway is many of these alts are very close to putting a trend shift in. Many things have already shifted trend. They just need to put a higher low in. For those alts, if you see a higher low now coming in, right, the break of structure confirmed, please do not hesitate to at least have a position open. Okay, because it might be the scariest to buy down there, but the risk to reward is also the best down here. Okay, just focus on that aspect. If anyone's interested in learning the way I trade, just reach out to me, right, for my one-on-ones. Otherwise, catch me in my streams. I will put this on YouTube for those of you who want to look at it again, and I'll talk to you guys soon. Okay, but thank you very much, guys, for all of you here. I appreciate your time, and I'll talk to you soon. Bye bye.